All right, so welcome to another deep dive, everybody. Today we are going to kind of take a closer look at Warren Buffett, the Oracle of Omaha,
Right.
and recently he's made this move that has kind of got a lot of people in the financial world kind of scratching their heads.
Yeah, that's
So,
right. I mean, this is a guy we're talking about, right? Who in over 58 years with Berkshire Hathaway has average returns of over 19% per year.
yeah,
And like consistently beating the S&P 500.
yeah, and he's famous for championing index funds,
Right.
as a solid long-term investment.
Yeah, exactly. Yeah. I mean, he even once famously recommended putting 90% of his wife's inheritance
Right.
into an index fund.
Yeah,
So imagine the shockwaves when news broke that he just dumped his own positions in two S&P 500 index funds.
wait, what?
Yeah.
That doesn't sound like the Buffett that we know.
Right.
So which funds did he sell off? And what's this Motley Fool article saying about all this?
Okay, so he sold off the SPDR S&P 500 ETF Trust and the Vanguard S&P 500 ETF, both of which are basically these baskets of stocks that track the S&P 500 index.
Okay.
And this happened in Q4 of last year, 2024.
Okay.
And yeah, the Motley Fool article we have, it really flags this as kind of a major event,
Right.
given Buffett's past advice.
Yeah. So picture this, right? You're someone who's been following Buffett's advice for a long time, diligently putting your money into an S&P 500 index fund. And then you hear that the guy himself has bailed on the very thing that he's been recommending.
Right.
I mean, it's almost like finding out that your favorite chef secretly hates the dish he's famous for.
That's such a great analogy.
Yeah.
Yeah.
It makes you wonder,
And it gets even more puzzling, right, when you consider the S&P 500 has been, generally on this upward trend.
Yeah.
So why would he sell now?
Yeah. Okay, I'm hooked. Let's get into the possible reasons behind this move, because I know that Buffett's a huge proponent of value investing, which, I mean, that seems to clash
Right.
with selling off index funds, right?
Yeah, you're spot on.
Yeah.
Value investing is all about finding those undervalued companies, right?
Right.
With great long-term potential. And often it's about going against those popular trends.
Right.
So that's what makes the sale so intriguing.
So if he's not simply following the herd, then what clues are out there that could explain this move? I mean, is it a lack of faith in index funds? What is it?
Well, remember that quote where Buffett called current market behavior casino-like?
Oh, yeah.
It seems like he's maybe feeling uneasy about the way things are going.
So maybe he's sensing a disconnect between the market's upward momentum and the actual value of the underlying companies?
Yeah.
Is that where the Shiller CAPE ratio comes in?
Absolutely.
Okay.
It's a metric that compares stock prices to long-term earnings, and it adjusts for inflation.
Okay.
And right now, it's flashing red.
Really?
We're in territory that's only been reached twice before in history, and both times it led to significant market corrections.
No. So is it possible that Buffett sees a bubble forming and just decided to kind of get out ahead of a potential downturn?
Mm-hmm.
I mean, it's not like he's abandoning investing altogether, though, right?
Well, that's an important point to consider, right? He bought a new position in Constellation Brands,
Okay.
and he increased his holdings in 5 other companies during that same period.
Okay. So he's still in the game,
He's still in the game.
just shifting his focus a little bit.
Exactly.
That's actually kind of reassuring for those of us who aren't billionaires,
Right.
Is he still finding opportunities,
Yeah.
even in a market that he's seemingly wary of?
Precisely. And it highlights that crucial difference, right, between him and the average investor.
Mhm.
He has the resources and expertise to really dig deep into individual companies and make those calculated bets, right? But that's not something most people have the time or the knowledge to do,
Yeah. Okay, so we've established that Buffett isn't shying away from investing.
Right.
He's just being more selective,
Mm-hmm.
which makes me really curious about these companies that he's chosen.
Right.
So what's the story with this Constellation Brands position?
Sure.
I know they make Corona beer,
Mm-hmm.
but what else do we know about them?
Yeah, so you're right. They are big in the alcoholic beverage market.
Okay.
They own brands like Corona, Robert Mondavi wines, and Svedka vodka.
I wonder if he's predicting a spike in drowning our sorrows drinks if the market takes a dip.
Right.
Just kidding. Sort
Yeah.
of. But on a serious note, why would Buffett be drawn to this particular company right now?
Yeah, it's unlikely he's banking on a market crash-induced, drinking spree.
Right.
More likely, he sees Constellation Brands as like a classic value play.
Okay.
You know, they've got a strong track record, a diverse portfolio of really well-known brands.
Mm-hmm.
And let's face it, alcoholic beverages tend to be somewhat recession-proof.
Mm-hmm.
You know,
True.
people might cut back on other things, but their drinking habits are often the last to go.
Yeah, that's a fascinating point.
Yeah.
It kind of reminds me of how people still went to the movies during the Great Depression, you know?
Right.
It was like this form of escapism, a way to forget their troubles for a while.
Yeah.
Maybe certain drinks serve a similar purpose.
Exactly. It's all about, you know, finding those businesses that can weather the storm,
Right.
regardless of what's happening in the broader economy.
Right.
And Constellation Brands definitely fits that bill.
Okay, so that makes sense for the new addition.
Mm-hmm.
But what about the companies where he increased his existing holdings?
Right.
So we're talking Apple, Bank of America, Occidental Petroleum, Paramount Global, and Louisiana Pacific.
Yeah.
That's a pretty diverse mix.
It is a diverse mix, but if you look a little closer, there are some interesting commonalities there that I think reveal a bit of Buffett's strategy.
Okay, I'm all ears. What are you seeing?
Well, take Apple, for example.
Okay.
I mean, it's a cash-generating machine, right? They have this fiercely loyal customer base and a proven history of innovation, and they're not standing still.
Right.
They're pushing into new markets like augmented reality and self-driving cars,
Right.
which could signal massive future growth.
So it's not just about their current dominance, but also their potential
Right.
to stay ahead of the curve.
Exactly.
I like it. What about the others?
So Bank of America benefits from those rising interest rates.
Okay.
Occidental Petroleum stands to gain from, you know, continued demand for energy, even has been transitioning to those more sustainable sources.
Right.
Paramount Global owns valuable media assets,
Mm-hmm.
and Louisiana Pacific is a major player in the building materials market,
Okay.
which could see increased demand if that infrastructure spending ramps up.
Wow. When you lay it out like that,
Yeah.
it really does paint a picture of Buffett betting on companies that are either like resistant to those economic downturns or well-positioned for future growth trends.
Exactly. And I think that's a key takeaway for any investor,
Yeah.
right? Don't just react to headlines or those market swings.
Right.
You know, instead dig deeper, understand those fundamentals of the businesses you're interested in,
Right.
and make decisions that really align with your long-term goals.
So even if we can't replicate Buffett's exact moves, we can definitely learn from his approach.
Absolutely.
Yeah, and for the average persons who might not have the time or the expertise
Right.
to scrutinize every company, he still advocates for index funds, right?
Absolutely. He hasn't completely abandoned that advice. It's
No.
just that his own situation and investment goals
Right.
are obviously different from the average person's.
Yeah.
You know, he's playing a different game, so to speak.
That makes sense. But his actions do raise an important question for those of us who are investing in index funds.
Mm-hmm.
Like, if the market is potentially overvalued,
Right.
should we be worried?
That's where things get really interesting.
Okay.
And we'll dive into that right after this.
Okay, so we're back and ready to kind of tackle this big question
Yeah.
that's kind of looming over all this.
You're right.
What does Buffett's move mean for those of us who are invested in index funds or considering them?
It's a great question, and I think one that a lot of investors are probably asking themselves right now,
Right.
especially since for so long index funds have been, you know, touted as this kind of set it and forget it approach for folks who want to participate in the market without getting into the,
Right.
you know, the weeds of individual stock picking.
Yeah, and that advice has come from Buffett himself.
Exactly.
So is he now saying that index funds are no longer a good idea?
Not necessarily. I mean, remember, he's always emphasized the importance of long-term investing.
Right.
His concern seems to be more about the current market environment and like the potential for overvaluation. You know,
Yeah.
it's like he's saying, hey, things might be getting a bit frothy here.
Right.
Let's be cautious.
So instead of panicking and selling everything, maybe it's more about taking a step back and assessing our own like
Yeah.
individual situations and goals.
Exactly. Yeah. If you're someone who's, you know, decades away from retirement and investing for the long haul, those short-term market fluctuations shouldn't really derail your strategy,
Right.
especially with index funds, which are designed to kind of ride out those ups and downs of the market.
Right. But what about folks who are a little closer to retirement or have lower risk tolerance?
Mm-hmm.
Should they be rethinking their index fund holdings?
That's where it's, you know, crucial to have that financial plan that aligns with your specific goals, and your risk appetite.
Right.
So if you're feeling uneasy about the market's, current valuation, there are options.
Okay.
You could consider diversifying your portfolio further.
Okay.
Perhaps shifting some of your assets into, less volatile investments like bonds
Right.
or real estate.
So it's all about finding that balance between staying the course and making adjustments as needed.
Yeah.
It's not about mimicking Buffett's every move, but understanding the principles behind his actions.
Right.
And kind of applying them to our own circumstances.
Absolutely. He's like that wise mentor who kind of nudges us to think critically, to ask the right questions, and make those informed decisions based on our individual needs and goals.
One thing that really struck me about this whole situation is that even someone like Warren Buffett,
Right.
a legend in the investing world,
Right.
is constantly adapting his strategy.
Mm-hmm.
It's a reminder that the markets are always evolving,
Yeah.
and we need to evolve with them.
That's a brilliant observation. Yeah. What worked 10 years ago might not work today, right?
Right.
The key is to stay informed, keep learning, and be willing to kind of adjust our approach as the landscape changes.
So it's not just about set it and forget it.
Right.
It's more about set it, check in regularly, and adjust as needed.
Exactly. And that's the beauty of investing.
Yeah.
It's this lifelong learning journey. There's always something new to discover, whether you're a seasoned pro or just starting out.
That's a great takeaway for our listeners. So as we wrap up this deep dive, let's leave everyone with a final thought to ponder.
Yeah.
We've talked a lot about Warren Buffett's moves, but what about you? What are your personal investment goals?
Yeah. Are you saving for retirement? A down payment on a house or something else? And how might this shift in market sentiment affect your strategy? Maybe it's time to revisit your asset allocation, explore different investment options. Or, maybe it's a reminder to just stay the course and trust in the power of that long-term compounding.
Whatever your situation is, we encourage you to keep exploring, keep learning, and keep those investment goals in sight.
Absolutely. And remember, there are so many resources available to help you on your journey, from books and articles to podcasts like ours,
Right.
and online communities.
Yeah, don't be afraid to ask questions.
Yeah.
Seek advice from, trusted financial professionals.
Right.
Because ultimately, the best investment you can make is in your own knowledge and understanding.
That's a perfect note to end on.
Yeah.
Thanks for joining us for this deep dive into Warren Buffett's latest moves.
We hope you found it insightful, and as always, we'll catch you on our next deep dive.
See you then.
Until then, keep learning and keep investing in yourself.